Welcome to the Decrypting Central Bank Digital Currency webinar series. The project is run at the Financial Services and Technology Regulation Center at the Faculty of Law and Administration at the University of Warsaw. The webinar series and research project is driven by 3 researchers. Let's meet them.
Our webinar series is going to be composed of 5 parts, each of which will be covering different aspects of central bank digital currencies.
The objective of this webinar is to explore the basics of central bank digital currencies, understand the business and societal context in which they emerge, and identify a common taxonomy that will be followed during this series. During this seminar, we will illustrate this topic with examples of practical implementations of the CBDCs around the world. Whether you are new to this topic or you want to explore it further, then this webinar is for you. Maciej, what are central bank digital currencies or CBDCs? What's the background of their emergence?
The concept of CBDCs derives directly from all of the discussion about cryptocurrencies and their practical use in the modern economy. If we want to define CBDCs, we can basically say that they are virtual currencies issued and controlled by central banks. There are certain criteria that a virtual currency has to meet in order to be qualified as a central bank digital currency. The first one, an obvious one, is the fact that it has to be issued by a central bank. Non-central bank institutions do not have the same rights for obvious reasons. The second element is that a central bank digital currency would have to have the same characteristics as cash, which is in circulation. So it has to be a digital representation of cash and share exactly the same requirements and meet the same requirements coming from the general public. The third criterion that has to be met by virtual currency to become a CBDC is the fact that it would have to be accepted by the general public, by the population. Without a general use, without an adoption by the population, there wouldn't be that same effect as the one that we are currently experiencing with the use of cash. The fourth element is, I would say, an optional one, because it strictly depends on the type of technology we use. However, there are certain people who think that it might be necessary to also meet the following characteristic, and this is a capability to be exchanged on a peer-to-peer basis, so that the users can exchange it exactly in the same way as simple cash.
What about private digital currencies?
Mm-hmm.
Is it a competition for the central bank digital currencies?
So the discussion about CBDCs is not new. The concept of digital money predates Bitcoin, and it derives from the first wave of digitization of money exchanges back in 70s and beginning of 80s. What happened is that right now the technology is capable of meeting certain objectives that cannot be met with traditional banking or interbanking infrastructure, such as immediacy of settlements between different parties, such as anonymity related to an exchange of digital assets between 2 wallets. It is also stemmed from a fear related to the emergence of private digital currencies, cryptocurrencies, or such ambitious projects like Libra that would potentially, or is considered by some central banks as a direct threat to them. So I would say the reason why we are talking about CBDCs right now is because we finally have the technology that is giving us a possibility to adopt them on a wide scale, and also because there are some social trends and other, let's say, institutions which are not central banks that introduce some competitive methods for exchanging digital assets between individuals and institutions that obviously need a response from traditional players in the financial market, such as central banks.
Karolina, why central bank digital currencies exist?
Thank you, Pavel, for this question. And as I'm really excited to start talking about CBDCs, you want me to talk about the central bank role. Okay, so in very short version, the central banks manages fiat currencies. But let me start with the short definition what the fiat currency is, and maybe even what money is, and then we will I can share more about the roles of the central banks in economy. So first of all, money. Because fiat currency is the representation of money, it's the store of value for money. So money in generally is perceived as a medium of exchange in the economy, as a store of value, and as a unit of account. And money typically is based on one of two basic technologies. It could be tokens of stored value or accounts. Cash, for example, is token based. Balances in the reserve accounts or in commercial banks are account based. So this is short definition what money is, and what is the difference between money and fiat currency. So fiat currency like PLN or Euro or USD or any other national currencies, for example, they are represented by central bank notes. They are officially provided by central banks. They are accepted for taxes, for example, and the fiat currency relies in generally upon the system of ledgers. Different set of the ledgers we can. For example, the central bank ledgers or non-bank ledgers. We will talk about this probably later. So as I said, previously, that central bank manages fiat currency. So this is, of course, very, short and basic explanation. What is the role of central banks in the economy? So first of all, we have different types of the central banks in different countries or region. So the central banks usually they are government owned, but we have also examples that central banks could be private, In some countries we have two central banks, not only one. So as we can see even from this, government perspective, in the different countries or regions we can have different approaches. But I see the central bank's role, mainly from four dimensions. So one is the economic goals or objectives. Central banks is responsible for the stable prices in the countries they operate in, and about the moderate long-term interest rates. So this is their economic responsibility. Then the main one, which is probably the best known, is the managing the fiat currency. I mentioned this already. Managing the supply of the currency, the physical cash, the reserves, and managing the prices of fiat currency. What are the interest rates on the open market? what are the exchanges rate, and they also can make some intervention for the currency exchange. They can put some prices in place. The third role of the central bank is to oversee the fragmented banking industry. So, the central bank provides reserve for the commercial banking. In some countries, depending on the country and the region, they also regulate and supervise the banking system. In some, as I said, depending on the law in the country, sometimes the supervising role is split. So not the central bank is doing the supervising role, but another institution. They also promote, safe and efficient payment system. And the last one, the last role, the fourth one, I see is, that the central bank is quite often perceived as a bank for the government. So first of all, they manage those economic policies which help government to make the economy stable at least. And just last point, I know I'm talking long, sorry guys, that we should remember about those two-layer banking system we have, or banking industry we have. That we have central banks and the commercial banks, and in the central banks we have the reserves and cash. In the commercial banks we have the bank deposits, and we can see both of those types of banks. Central banks, commercial banks, they have money ledgers. So I think that we will come back to the ledger topic later when we will jump into the solution for CBDCs.
Why do we need them?
Why do we need central bank digital currencies? Let's start, from the why do we need money? Why do we need currencies? For what purpose? And then we can try to evaluate why do we need digital currencies or central bank digital currencies. So first of all, we use money, to exchange value in the economy, and this is the basic of the economy, as a medium for this, we use the payment system. We know currently, and this payment system has a lot of challenges. So just giving you the, some examples, this 21st century. Internet is like everywhere, we talk about the advancement of artificial intelligence and so on. And I just wanted, 2 months ago, I wanted to make a transfer to Denmark. So not in the Eurozone, no, in my own currency, which is the PLN, Polish zloty, but in the Denmark currency, Danish currency. And first of all, it took my bank 3 days to make this transfer, from my account to the person I send the money to account, and it cost me some money. It was not a lot, about I don't remember, few dollars, let's say that way. But first of all, it's like unbelievable. I can do this type of the transaction using some fintechs like Revolut, for example, immediately, without any delays. But the global official, payment system, especially for the international cross-border payments, is very weak. It has a lot of pain points, and the time and costs are some of them. Of course, there are more of them. There are more challenges in the payment system. The frauds, different types of the frauds, the privacy, and then availability. Maybe, the availability is not something which is important for the people in Europe, but for some other countries where financial inclusion is an issue, this is also the challenge. So we need effective payment system, and to address this, there were several initiatives to improve this since many years, including digital currencies. So, as far as I remember, the first one was by David Chaum, the DigiCash, in '89. So it was not Bitcoin, Then there were many others initiatives when especially the technologists, cryptographers try to create the digital money or digital currency. Hashcash, for example, another one. Of course, the most known right now is the Bitcoin. But the disruption in the payments, they were also different, not only digital currencies. So we had the PayPal, for the internet-based payments. We have M-Pesa in Africa for digital mobile payments. Yeah, we have right now, the mobile phone wallets, which help us to make the payments and address some of those challenges. So not only digital currencies try to address this, but also some other improvements by leveraging, the innovative technologies. And also from the, let's say, regulatory perspective, we see many initiatives like PSD2 in European Union, which try to improve the effectiveness of the payment system in general. And so why we need CBDC? Yeah, we have private digital currencies. Yeah, they are cryptocurrencies. We also see that some big technology players like Facebook, they have ambitions to launch the global digital currency, which will be private. I mean Libra in that case. And this is really huge threat for the fiat currency, national money. This is really huge threat. So I think that for the central banks, as they were looking at the cryptocurrencies or digital currencies since many years, right now, especially after Facebook announcement about Libra last year, they really speed up with developing those solutions as a nationwide or global. And I think the main reason is really to address some of the pain points and challenges in the global payment systems and to improve the effectiveness of the global network.
And the last question to Maciej. What is the real impact of central bank digital currencies today?
Apart from a vast amount of research that has already been done since around 2015 during the first wave of interest among the financial institutions with regards to blockchain, DLTs, and cryptocurrencies, we can also see the first examples of real tests, practical implementations, obviously on a limited scale, in a number of countries. China, for example, as of today, August, September 2020, announced that it is already testing a central bank digital currency in a number of provinces and in Hong Kong. In Europe, European Central Bank is already conducting tests with a number of technology providers, and it has already made several conclusions which have been documented in form of a report issued in March 2020. Bank of England, again, is one of the first institutions in Europe that addressed this concept and try to tackle it in a structured manner by applying a certain methodology. So we already have a considerable amount of research, some outcomes from the first testing that have identified some technical challenges or societal issues or risks that have been effectively documented by WEF and BIS reports. But we also have first successful implementations, obviously on a very limited scale, that might potentially end up at some point as complete production-ready solutions which are used by the general public. And I suppose that Asian Pacific is likely to be the first place where CBDCs are likely to be rolled out in production, followed by Europe, ending up with North America.
Please sign up to our LinkedIn profile to get up-to-date information. Ask questions. We are happy to discuss CBDC topics with you. And mark your calendars with webinar dates.